Very, very thinly traded market. Let's get the read on it from Dan Geltrude and Charlie Gasparino, both here in the flesh with me. Love to see them. Dan, what's going on?
Well, I think that the market got a little bit carried away with itself to say, hey, this is great news with these job numbers, and it is. But how much does it really matter, Neil? What really matters, in my view here, is what's happening with the economy, specifically inflation. Yeah. This is not going to change what the Fed is set on doing, which I believe is going to be a 3/4 point raise.
So that's still baked into the proverbial cake. Nothing changes there. So this Goldilocks notion that it wasn't too strong, wasn't too weak. You don't buy that?
No, I don't buy. I don't think it means all that much as it pertains to the market. And I think ultimately what the Fed does with the interest rates is really where the impact is going to be on the market. Look, if Jerome Powell is going to stay on the path of we're going to continue to raise interest rates until we get to a target of somewhere around 2% inflation, we got a long way to go, Neil.
We got a long way to go. So maybe that hasn't changed, that sentiment, right?
This guarantees 75 basis points, in my view.
Yeah.
I kind of tweeted this out when it first happened, and then the market went up 300 points. I was like, whoa. And I think what they're doing now is, what traders and investors are doing now is parsing through the numbers more detailed. It was a good report, but wages are still not growing fast enough because they're still getting eaten away by inflation.
Right.
On top of that, productivity numbers. You look at the productivity numbers, they're lousy. They almost guarantee more inflation. So I think we're in an era where this is three-quarters of a point and maybe another 3/4 of a point guaranteed now. And I think the markets are starting to digest that fact.
Yeah, and these are fast market conditions. And Dan, as you tell me, they could change markedly in minutes, which we've seen already with the down. I am curious, though, what the market fears more, a recession or rate hikes that could almost guarantee it?
Well, they kind of go hand in hand, right?
Yeah.
So if we're going to continue down this path of inflation, the Fed doesn't have much of a choice but to continue to raise interest rates.
But they've made it clear they're fighting inflation. You know, collateral damage is a recession, but they can deal with it.
Right. Listen, Neil, they've been late to the party, right?
Yeah.
And now they're trying to make up ground. And you know what? There's no one to blame but themselves. They wanted to buy into the political headline of that it was going to be transitory. And, of course, that was absolutely not the case. Inflation doesn't retract that easy. Once it grabs hold.
Now they've gotten it belatedly, right? So there's no pivot, Charlie. And people who had been hoping last Friday at this time for such a pivot, they're not going to see it, are they?
Yeah, I think this guarantees no pivot. Just the way this report came out. Also, look at the names that are getting crushed today, or are red now. Not quite getting crushed, but they're red now. And a lot of it is tech. And think about it, tech is kind of the earnings picture for tech hasn't been that great, and
a lot of these issues have been cut in half.
And so I'm just telling you that employment lags the reality of what's on the ground in terms of corporate earnings. There still may be employment gains, but the market may be sensing that we are still in a recession. We still have negative GDP growth.
What do you think when you look at this right now? You think about it, Dan, you got a lot of people who are still traveling, the crowded airports this weekend. They're still buying things, maybe not as actively as they were, but the consumer's still in fairly good shape. Job gains are, to your point, impressive, although off their highs. So we have that as a fallback, but for how long?
Well, you know what, Neil? I think it's almost like we have two different economies out there right now. You have some people that are hurting, and you have some people that are doing really, really well. Like, I know the jobs number, great number, we all agree. Let's look behind that. Look at what Facebook is doing. They have layoffs. Walmart, Ford, 3M, Credit Suisse. What's going on there? Amazon. Why are these companies cutting back on employment?
Over 11 million available jobs.
So that's what I'm saying. So it's kind of like real estate. It's all about location, right? So when you look at where these job numbers are going, where are jobs growing and where are jobs shrinking? Because it could be in two different places. To me, Amazon cutting back, that's a troubling sign.
Interesting. What do you think?
Listen, I think you look at the productivity numbers, they're not good. If you look at the fact that people are not taking jobs, that's not good as well. I think it means that inflation is still going to be high, and it's going to, and obviously wages aren't keeping up with it, and it forces the Fed to slow things down, and that's where we're going.
By continuing to hike rates, and maybe that's the realization.
Don't be surprised if we get stagflation for a while too, like
we have a long way to get to that.
You don't know. We got two.
You and I lived through it. He's too young.
Wait a second. We've had 2 quarters of negative GDP growth, and we have inflation.
Well,
that's
we have steady
technically
job growth of more than 300,000 a month.
Or we
didn't
don't
have that with Jimmy Carter. Now we might get there. You're right. Might get there.
By the way, off and on we got there with Jimmy Carter. It wasn't a straight line down.
But, Neil, you're seeing some of these big employers, right, and they're reducing jobs. Yeah. And the question is why? And this is what I think is going on, and Facebook is proving this out right now. They're outsourcing. They're going outside the U.S.
It's also digital ads are going down. I mean, their business is it's not just outsourcing. Their business is faltering right now.
But there is a shift there, Charlie.
Yeah.
So
they've been outsourcing for years, just so you know. But I mean, if you look at the digital ad market, it's way down, and they're all talking about it.
Don't you guys think that technology? Now, I get the whole technology phenomenon thing, believe me, but that it was, it stood out and how much it ran up compared to the regular market, and now. Is it standing out for going too far beyond what the regular market has done and sold off?
Well, I think that big tech in general, Neil, well, I think they were inflated for a while. I think they're coming back.
Well, they were
to reality.
inflated by the shutdowns, just in of itself. I mean, they were inflated. We needed Zoom.
So this is a normal comeuppance. You guys don't think it's overdone, or?
Who knows, Neil? I mean, we're in like such uncharted territory. Aside from big tech, they printed and spent so much money for 3 years that, the unwind of that, and people are talking about this, could be really catastrophic. I mean, think about it. As much as it goes up, you go up that hill, you got to go down that hill sometimes. And what's the guy's name? Jonathan Gratham, the great.
He's thinking a big crash.
He's not alone.
Yeah.
I mean, people are talking about this.
Right. So Charlie, right? Trillions we print. Now we have interest rates going up. How are we going to cover that?
Yeah, that's a problem.
Taxes?
Yeah.
Taxes? That's not a good thing.
Let's say tax just Charlie.
Yeah, please do.
Yeah.
Fair share, Charlie. Fair share.
I'm just thinking of outsourcing Charlie. Like, how would that go?
Oh, that would be difficult.
Yeah.
Try to get a robot to do my job.
Yeah. All right. Don't tempt us. Do not tempt us.
Robot will be better behaved, Charlie.
Well, obviously.